everyone. Good morning. I'm your host, AnneMarie Band, and welcome to the inaugural event of the Daily Edge on the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group's event contracts to trade Russell 2000 gold, silver, euro, crude oil, nat gas, copper, and now Bitcoin. Today's broadcast is brought to you by Trade which is built a custom app dedicated to trading CME Group's event contracts. You can trade them on the custom app or using the Dome on the main platform. Today, I have Michael Fall with me, and thank Michael for coming on and talking to us again about his daily edge and where he looks for opportunities to participate in the market. So, Michael, welcome.
Perfect. Well, thank you very much for having me on. I'm really excited to be here, and hopefully we can have a pretty productive conversation.
Yeah, I hope so. So we started the day, we were actually just talking a few minutes ago about how yesterday's inside candlestick formation sort of told us a little bit about potential positioning into the FOMC tomorrow. And that's always something that makes me interested, saying, hey, how does looking at the prior day or 2 days before bring us into a space where we go, oh, you know what, I can develop a trading edge. And so that's really what I want to talk to you about in terms of edge. You and I both think risk is super important. So tell me what you think about positioning in terms of that risk perspective first.
Yeah. So for myself, it's working backwards from a risk management perspective, right? If I can basically focus on all my decisions on kind of losing in control and kind of making sure that I stay within my max loss number, then compounding green days and being able to kind of bounce back from red trades, it isn't as mentally exhausting. Now, everyone's going to have red days, right? Everyone's going to lose. Everyone's going to have moments where the market kind of kicks their ass a little bit. But as long as I'm not kind of breaking down or kind of overwhelming myself or taking hits that are bigger than I'm expecting, then it's easy for me to kind of survive and bounce back and kind of maintain my enthusiasm for kind of trading this fairly emotional job, right? A lot of what that is kind of like a proactive versus reactive decision, where my kind of belief is that, yeah, good risk management is a proactive, not reactive decision. I need to be making those decisions before I enter a trade. I need to be making those decisions or evaluating market conditions before they happen, so that I'm basically just putting myself in as many good situations as I can, or in situations where I have a positive expectation of being profitable.
Excellent. So I wanted to touch on something that you just said a little bit ago in terms of setting that risk. So let's say you position for a trade and you get stopped out. When you are sitting in a space where you've organized a trade, set the stop, and then the stop gets run, what kinds of things do you do to either reaffirm that you were right, but your stop was in the wrong place, or you're wrong and you should be looking in the other direction?
For myself, it's about consistency in my technique. So if I'm able to put my stop loss kind of in the same sort of spot every single time, now it's going to be different, obviously, depending on your conditions. But if I'm a big believer in the setup, confirmation, execution method. So I have a setup trigger, I have a confirmation trigger, and then I'm looking for my entry timing. So if I'm able to say, if I'm bullish, place my stop loss at my low of my confirmation candle, I'll be able to then at least notice if that is consistently sort of the wrong area to place my stop loss. But if my technique is really inconsistent, or I'm kind of making it up as I go, then I'm going to slow down my learning curve and not be able to notice the patterns that are costing me money. So the more consistent I am in my technique, the sooner I'll be able to notice, okay, I need to fix this, I need to fix that. Then I can make those changes. And then also understanding that this is a game where you need to solve for like 70% and not 100%. And so if I can then, basically have a confidence that, hey, 70% of the time, this is the right spot. There's no technique that's going to work 100% of the time. So I kind of have to accept that there's going to be a little bit of variance. That I'm going to have the right idea. My stop is going to get triggered and then it's going to run, or, I'm going to sometimes not get stopped out. It's just going to hang out, 3 cents away from my stop loss for an hour. These things are all part of what this game is. And so I can't get too overwhelmed or too attached on a case-by-case basis. I need to zoom out and kind of look at it on a month-to-month or on a slightly longer time frame, and make sure I have enough data where I'm being able to evaluate my sort of technique or my strategies without being too caught up in the short-term variance.
Okay, so let's actually look at a chart right now and see if I can understand what it is that you're saying. We are looking at the Trade of 8 platform right here. These are the event contracts. We'll be talking about those in just a little bit. But I've got this on a daily formation, and you said a moment ago, hey, I'd like for my stops to be sort of sitting in the same place. And so when I hear that, I want to sort of drill down on what that might mean. And so if we're looking at this chart for a week, or where would you look at something and say, hey, that's where I want my stop to be? How would you orchestrate that based on priors? What time frame would you start with?
Yeah, great question. So say if I'm looking for like a level breakout, for example, like maybe a 4206 break, like you have that kind of top line there. What I'd be looking for is the first candle that gives me a break, close, and hold above that level on increasing outlier volume. So I want to see that momentum step in. I want to see that strength step in. And then, on that candle that break, closes, and hold, my stop loss is going to be at the low of that candle. So it becomes kind of that same process every single time. So my setup is that for 4206 price level hitting, then my confirmation becomes that area holding on increasing outlier volume. And then I know that my stop loss needs to be the low of that candle. If that low kind of gets wiped out, then realistically my idea was probably not correct, or maybe I didn't have the right timing, whatever it is. So I'm just looking to, always have kind of my stop loss at my low of my confirmation. And then I'm using the first short-term time frame that gives me confirmation that kind of coincides with the daily trend that I'm looking at. So if I'm looking for a bullish breakout, I'm looking for the first 5-minute candle, first 10-minute candle, first 15-minute candle that gives me confirmation of that bullish momentum on the shorter time frame. So I'm looking for basically confluence to kind of step in and kind of narratives to sync up on the shorter and longer time frames.
All right, very good then. That makes good sense. I think a lot of times traders look for that note that says, hey, listen, I want that stop, or I want that area to be the same region, but then how we design what that framework looks like really vary, right? Because a breakout can always end up doing something like this and then collapse off the edge. But if you know, hey, this is where my floor needs to be, that's really going to help someone manage their intraday losses and that sort of thing. So from that perspective, if you're setting up and saying, hey, listen, I want to go backwards, I've got my risk assessment where I think, hey, I don't want to lose this any more than this certain amount. Do you have a daily stop loss where you say, hey, listen, I am not trading anymore today. I obviously can't see what the market's doing, or I just don't have a feel for it, or what kinds of breaks do you put? What kinds of barriers do you put around yourself so that you don't have, a negative 10x day or anything mad like that?
So I think every trader has a number that breaks them, where once I lose X amount of money, I kind of stop thinking like a logical human being. And so my kind of, I guess, like personal risk structures are based around making sure that that number becomes impossible. So for me, when I lose more than 10K in a day, I kind of get that like out of body kind of blackout experience where now I'm making decisions where I don't really feel like I'm in control. And so that happens, right? And the objective is to basically make sure that I don't hit that number. I kind of have kind of two things that I kind of focus on a little bit. It's one, never losing more than 1% of my account after stop loss. And then if I go 0 for 3 for the day, that's probably a sign that I should be stopping. One thing that I've been trying to focus on a little bit more here recently is if my first trade is green, then I'm walking away. If my second trade is red, then I'm probably walking away as well. And so I'm just trying to put myself in situations where bouncing back from a red day is as easy as possible.
Yeah, and that's really critical for building a long-term edge in terms of getting yourself better mentally every day. You can't beat yourself to death with a mallet going down really far and having that blackout state, and then expect to come back the next day and operate, because you've got muscle memory from the tragedy that happened the day before. So
Exactly. You're
totally
trading with
get that.
baggage.
Exactly. I have that same 3 strikes you're out. If I make 3 trades in a row that lose, no matter what it is, if I just make 3 of them, I just pump the brakes and say, hey, I am just not seeing the market the way that it's being presented. And so I've got to step back. So I certainly do that for myself quite a
And that's
bit.
totally normal too, right? Like no traders green every single day or consistently, constantly making, $1 million on every single trade. That's just not reality. I think a lot of people get sold that kind of narrative on social media, but this game is about learning how to lose in control. And the better you are at losing control, I think that's a stronger indicator of how successful you're actually going to be as a trader.
Yeah, that's so, so true. So let me ask you a little bit about how you feel about price on its own. I noticed that you said, hey, when I look for something breaking out, I want to have confirming volume. I know that there are a lot of traders, and sometimes I am actually one of these traders, where I'll see a price point and I'll know that I've either got a volume expansion event or a volume exhaustion event, but either way, I'm going to run into some measure of resistance and it's going to stop me out.
Mhm.
So how important is that space where you say, hey, volume has to be here or I'm not going to take the trade?
Yeah. So the way I kind of look at it is if I was going to a party and they're kind of turning down the volume of the music as I'm showing up, I'm probably not going to have a great time at that event, right? I just want to go dance. I want to have a good time. Like I want to go shake my hips a little bit. And if that volume is getting turned down, then I don't have a huge expectation that the party is going to keep going on for a long time. So at the very least, as a momentum trader, I should see increasing momentum. Now, increasing momentum can be defined as a lot of kind of different things. But for myself, it's when like narratives are kind of consistent. So when I see strong candle shapes, like if I'm bullish, I want to see kind of bottom heavy wicks or kind of full body candles, and then that kind of increasing outlier volume profile. And so when those narratives sync up, then I feel like at least, okay, 70% of the time, 75% of the time, I should have a bit more follow through, or I should have an expectation that I can at least hit my first profit target. And so that's kind of what I'm trying to solve for.
Would you ever try to convince me that that's what I absolutely had to wait for before I took any particular trade in a direction? Would you say that's an anchor to your process?
Well, I wouldn't say I need to convince you that that's the way you need to trade, but for my own personal style and for how I like to trade, that's what kind of catches my eye. I've been able to kind of back test that and build a lot of confidence sort of trading it in that way. And then based on sort of my institutional trading experience, we were always taught to avoid slippage, right? The best way to avoid slippage in trade execution is to hide among kind of the high volume bars, right? If I'm trying to execute a $40 million position in Apple, it's going to be a lot faster for me to execute that when I actually see that volume stepping in. So that's a lot of where that bias is kind of coming in from. If I want to be anonymous in my entry as an institutional trader, then I can hide a lot easier in those big volume bars. And so that's sort of the core concept that I've kind of developed my kind of edge towards. But the reality is that there's a million different ways to win as a trader. So it's not, you don't have to do what I do to be successful. You just have to learn how to manage risk and find that sort of pattern that you think you can take advantage of.
I love that. That's fascinating. Certainly somebody like me who's never been in a professional sort of hedge fund type environment like that, to say execution hiding in the volume makes things easier. And so that's fairly fascinating. So do you ever look at a chart like this, like we're coming into right now, and look at all the red bars we've had since the opening tick? We've just, on this 5 minute, we literally have had no green bars to finish. So let's say that this area around 4109 is potentially a floor for you.
Mm-hmm.
When you're developing this process, are you saying, okay, now I'm going to watch for the upticks in volume? And do you use something like a dome to do that?
No, so I'm literally just focusing on candlesticks and volume. So I try to keep my process as simple as possible. The more tools I kind of add to my kind of trading strategy, it feels like I could either create confirmation bias, or I start looking for confirmation bias to kind of have my idea, or I start looking at too many things that just causes hesitation. And then hesitation makes me late on my entries, or it makes me a little bit sloppy on my entry timing. And that ultimately just costs me money. So I'm trying to make my process as simple as possible on a trade to trade basis. And then the more consistent that is, the less kind of variables I have to focus on, then it becomes easier for me to notice, okay, I need to add something else, or I need to improve this structure. But if I'm looking at, I need a MACD cross and then a volume profile, and then the DOM needs to be telling me this, and the order book or the level 2 needs to be telling me this. I'm looking at 25 things on a 5-minute chart, and I'm always going to feel like I'm confusing myself to try to find what I'm looking for, or I'm going to be talking myself into something that maybe isn't there. So yeah, I'm a big believer in like the KISS principle, right? The keep it simple, stupid, right? And if I can kind of execute that, like, retail trading is a different game than what you need on an institutional level, because I can execute patterns that don't require the same liquidity that an $11 billion hedge fund needs, right? Or a JP Morgan needs. So I can be a little bit more patient. I can be a little bit pickier in what I'm trying to do. And the beauty in that is that ultimately what being picky can actually look like is making my process more simple and a bit more binary versus looking at so many different variables.
I love that clean approach. I really, really do, Michael. That's really great. So while I have you here, what I wanted to do is show everyone the Trade8 PYT dashboard, where we actually get to see our event contracts sitting in this space. And because I like this area around 4,100, I'm thinking about, all right, let's take a look at what could happen in this space. And we've got some really neat things going on. We could have, one of my favorite things to do is the strangle. And so if we have the strangle, we can say, we can do the put, the 4,100, saying that's a no. So it'd be $5 right there. And then if we wanted to see it get above 4,140 on the close, we could also get the yes at 3.25, which is very small as well. And you can also leg out of those things. The platform is really straightforward, and you can look at how price is moving very, very nicely. So for those of us who do trade those event contracts, you want to look at these two strikes right here. I think they're going to be fairly meaningful, although they are, 40 points apart. We could actually see them do some very, very interesting things. My favorite thing to do is try to double the exposure in terms of the investment and then get out. So if we got this at 8, we bought this at 550, and we bought this at 8.25, then we would have about $9, something like that, sitting there, and we'd want to look for about 18, which is what Tracy did with one of her sides yesterday, which was fantastic. So, all right, that's awesome. Thank you for showing me that. And I do want to say, folks, when you do look, let's say you do think something is going to hold, it's really worthwhile to build yourself something that says, hey, can I tell how something's going to turn around? And even though a lot of these 5-minute candlesticks have started off green, they still continually turn red. And so it is clearly telling us it's not time to buy anything on an upshot right here. So I think that's always super important.
Markets are constantly trying to trick us into making a rush decision, right? So they're tricking us into thinking this is going to go down forever. This is going to be the instant spot where we get that reversal. All I care about, right, is when we get to these key levels, is I'm expecting a reaction at that zone. That reaction could be a continuation breakdown. That could be a reversal spot. But the objective as a trader should be to rely on facts, not feelings, right? What I feel a trade is going to do is often very different than what a trade is going to do. And I think most traders haven't trained their gut well enough to kind of build an edge off of that. So the more consistent your process can be around those key levels, the sooner you're going to find consistency in your outcome.
So let's talk a little bit about that training up of the gut. I read an article that said we've got more nerve endings in our gut than a dog has nerve endings in its brain. And so that training up the gut thing is actually a meaningful statement. How would you help someone say that they would have to do that? I know you do coaching on your site and you help a lot of traders. How would you say to that trader, here are the first steps to training up that gut?
Yeah. So for me, the point here, the key is to speed up your learning curve, right? And the way to do that as a trader is to be really consistent in your technique. So if every trade you're taking is a different setup trigger, a different confirmation, a different risk reward ratio, a different strike price, then you're just really slowing down your learning curve because you're not going to notice the patterns that are costing you money. So if you're a new trader, I think it's really valuable to kind of simplify your process. Okay, here's my one setup. Here's how I can define what that strength looks like. And if I execute those same techniques 100 times, it'll become really obvious to me what I need to fix and what I need to improve so that I can kind of make those changes and kind of scale. And then as you kind of reinforce those positive habits, as you slowly kind of build up a little bit of confidence in executing that, then you're going to have all of a sudden a history of doing the same thing over and over again. And you're going to start to notice the little tricks the market likes to throw your way to kind of cost you money. So if you want to train up your gut, if you want to become a more consistent trader, then you need to be more consistent in your process so that you at least have a baseline that you can kind of rely on.
That makes so much sense. It's like muscle memory if you're an athlete, right? You always step up to the plate a certain way. You always step up to the free throw line a certain way. So yeah, practice makes permanent. And if you've got practice doing all kinds of different things, you're never going to get anything permanent because you don't know which one actually sticks. That's a really great takeaway. You know, as far as the show, my goal is always bringing to the trader, how can you build an edge? And then how can you use that edge to really help you advance in the market? And I really have enjoyed the top things that you've shared with me. Is there anything that you'd like to tell us about what you've got going on in your neck of the woods?
Yeah. So for myself, I'm live streaming all my trades daily for my members. I just focus on kind of showing what I do with a kind of a fully transparent process. A lot of what I work on with traders is kind of, making their process more consistent, allowing them to kind of, take the strengths that they have and adapting some of my techniques to sort of their trading personality. There's no one perfect way to trade. So there's only really one perfect way to trade for yourself. And so this idea of chasing like a holy grail or trying to find this whatever perfect technique doesn't really exist. And really, if more traders kind of thought about, I'm trying to solve for 70% instead of trying to solve for 100%, that would remove a lot of their almost like pressures that they put onto themselves, right? Where if you're expecting to be green on 100% of your trades, then it's impossible to accept the losing trade when it happens. And so learning that, hey, this is a game of variance. This is just a numbers game. I can't take losing personally. And I need to be proactive in my decision-making process to make sure that those numbers don't become personal. And so the more that you can focus on those techniques, the more that you can focus on the variables that you can't control, the easier it is for you then to become a pretty successful trader. Now, there are a million different ways to win. We mentioned that already, right? There's not like one perfect strategy. But if you build your way backwards from a risk management structure, and you focus on, always kind of targeting 2-to-1 risk reward, right? Or 3-to-1 risk reward, buying yourself more margin for error, then you make yourself or you make your trading journey a little bit easier, or you increase your probability of being successful. And so we can't think in absolutes. We got to think in probabilities. We got to think in kind of, this is just a numbers game. And the more that we can kind of think about that, then the easier it is for us to kind of learn and improve and kind of keep growing. This is a long-term game. One trade isn't going to make you a millionaire, isn't going to make you retire or help you achieve all your dreams, but one trade can make you lose everything. And so if you can just focus on, making sure that that doesn't happen, then you can live whatever life you want, through this game. But the more that you ignore those kind of, inevitabilities, then you're just going to keep struggling. You're going to keep kind of bashing your head against the same wall, and you're never going to see that progress, or you're going to have 3 months of really impressive gains, and you're going to give everything back in a 2 or 3 day stretch. And so if you want to be consistent, you need to be consistent in your process, and you need to obsess over the sort of details that, you can control. And the more obsessive you can be about that, the more that you can track, the more data that you can kind of put together, the more you can kind of plan out all your trades, the easier it is for you then to find that consistency and at least learn from your mistakes.
Yeah, that's really great. And there are a lot of things that you said right there that are just so contradictory to the human experience, right? None of us want to fail. None of us want to do something at 70% because if we're in college and we get 70%, that's like a D.
Yeah.
And so, the mindset's just totally got to flip. The script has got to flip on the trader because really the more we study, I had this problem all the time. I just would say to myself, you know what, if I just studied harder, the trading systems, if I just studied them harder, then I'd get 100% no matter what. We know, hey, it's obviously I'm not going to win every time, but in our heart, we feel, oh, I've studied so hard. I mean, this has got to work. And so it really is a flipping of that mind game script. That's just a critical part to, developing that edge. I just want to say thank you so much for bringing what you brought to us. I love those concepts. I do have a tendency to move before volume, and so I am going to be thinking about that a little bit more. I tend to obsess about my levels, and once they get there, I go, no, this is it. It doesn't matter what really happens. And so that sometimes the market does kick me in the head with an iron boot. But other than that, I come back for another day because I do manage that risk event. So I want to say thank you so much for joining us. We love having you as a guest and look forward to the next time to seeing you. As for everyone else, folks, thank you for those of you that came to see my first show. We're going to have a lot of them. We're going to have a lot of great folks like Michael on, and we're going to be developing this daily edge. Go out there and remember that we have been brought to you by the amazing platform that is Tradeway and the CME event contracts. And I look forward to seeing each of you in the stream. Thank you so much, and I'll see you next week.